Hello, ladies and gentlemen, crypto deep divers. Welcome back to Weekly Crypto. Today, I will talk about new malware target Apple Mac computer to steal and mine crypto. Also, we're going to talk about a survival guide for 2019 because this year will be high volatility and a whole bunch of instability. So just in case you're new to the channel, just to remind everybody that Tron they're giving out NT token. So in order to get the NT token, all you have to do just play the game. So don't bet on something you cannot afford to lose. This is just a game. Also, you can sell your NT token in the Tron market as well. And also BetDice is giving out lucky draw, having lucky draw. So if you're newbies, you can still have the lucky draw. But if you have been playing with the lucky draw, they probably stop it already. Also, make sure you go to your wallet to claim your free token because sometimes you have some free token you don't know. You can go and check it out. So if you're interested, you can click the link below. So this is just a game. So don't bet on something you cannot afford to lose. So let's go back to the article. So before we get into that, make sure you subscribe to my channel so you don't miss out the upcoming airdrop or token swap. Also, you can follow me on Twitter as well. And let's get into it. So basically, there's some new malware in Apple Mac computer. They're going to steal your crypto and also use your computer to mine crypto as well. So basically, they recently discovered some type of malware that can steal your browser cookies and other information on the Apple, those Apple Mac computer. And basically, researcher at the cybersecurity firm and Palo Alto, they published a monthly public report on Thursday saying that the cookie miner, they basically intercept the browser cookie related to the cryptocurrency exchange and the wallet service provider. So this is the website visited by the victims. For example, those malicious code, they target exchange including Binance, Coinbase, Poloniex, Bittrex, Bitstamp, and MyEther wallet. And also some website having blockchain, in the domain name. And for MyEther wallet, I don't use MyEther wallet for a very long time. I have been talking about it in my channel. And I already use mycrypto.com because my crypto has more update and they always update the interface. They have more. I think it's more security in terms of what they do. They did a lot of update. Better than MyEther wallet, and MyEther wallet did not do much update. And also, let's see, and also, also because of the Binance, they basically doing some malicious code and all that. So be very careful when you go on those websites and make sure you don't trust some cookies. Sometimes there are a lot of websites, they ask you to trust the cookies. Most of the time, I don't trust it because it's dangerous. I don't want to do that. And also, you can use Brave browser as well to block some of the stuff, but this may not be foolproof. But the thing is, they at least block the checkers. They block a whole bunch of stuff. And because sometimes there's a lot of advertising, you may accidentally click on it. And then if you click on it, maybe virus, you don't know, but they block all the advertising as well. And they also try to steal credit card information from major issuers such as Visa, MasterCard, American Express, Discover, and as well as username and password that's saved in Chrome. So guys, don't save any password on the website, okay? So it's always ask you, do you want to remember the password? Of course not. No, right? You got to be careful out there so you don't know. And also iPhone text messages that are back up to the iTunes. Oh, that's not good. And crypto wallet key. So you got to be very careful. So you got to be very careful out there. And I would say that you should have two computers. One computer is for daily use. The other computer for your wallet. If they don't have a hardware wallet, you have to use the software wallet, right? So you install the wallet in another computer. That computer should be offline most of the time. The only time you go to that wallet is because you need to transfer something. Other than that, most of the time should be offline. Also, if you turn on your computer, if you're not using internet, just turn off the Wi-Fi, okay? Just turn it off. And then when you use it, just turn on the Wi-Fi. So most of the time, your Wi-Fi should be off unless you need to use it, right? Also, you should have two computers anyway. And so if successful, if they are successful stealing all this details, the hacker can gain full access to your crypto exchange and a wallet to steal your crypto, basically. And yeah. So cookie miner tried to navigate the past authentication process by stealing a combination of the login credentials, text messages, and web cookies. So the malware has another string, also changed the victim system configuration to maliciously loading the crypto mining software. So they use your computing power to mine crypto. Just like I think Monero, it seems like a lot of computers they have those malicious software for the Monero. They basically, your cell phone is mining Monero, your computer is mining Monero. I mean, a lot of computer, they already have those malicious mining software already. So they basically steal your computing power to mine all this coin. So the researchers suggest that the cryptocurrency user should keep an eye on the security setting and digital asset to prevent compromise and leakage. They also notify the malware check if an application firewall called So if there's a firewall program called Little Snitch running on the victim's computer, make sure you stop it and exit. Okay, maybe you need to do some antiviral or anti-malware software program to run through the computer to kill off all this, eliminate or remove those malware program. And Monero is by far the most popular cryptocurrency among the hackers, of course, and basically the hacker have mined nearly 5% of the total Monero in circulation. And then deployment of crypto mining malware are rapidly growing in numbers. And this is basically a study from McAfee they published in December, showing that there were 4 million new mining malware threats in the third quarter of 2018. Just in third quarter, there are 4 million new mining malware threat in 2018 alone, compared to last year, 500,000 in 2017 and 2016. But to me, those antivirus software program, those company, they may be the one who create those malware. Because if there's no malware, who is going to buy those antiviral or anti-malware software program? They may be the one who create all this as well. So I mean, maybe, I'm just saying maybe. Okay, so it's just speculation, may not be true. So, but who cares? Who knows? So just be careful out there. If you have some wallet in your cell phone, I would suggest that you have a second cell phone, two cell phone. So one cell phone is basically to do the wallet thing. That cell phone should be offline most of the time. The majority of the time, the only time you turn on that cell phone is to transfer your funds. Other than that, you should be offline. The cell phone that you use on a daily basis, that cell phone should not have any wallet on it. And also that cell phone, another thing, that cell phone, you should not connect it to the public Wi-Fi. Forget it. Those are very dangerous. You should just use your data plan. Don't be so stingy on those data plan, because right now the data plan is not that expensive anyway, right? So the next stop, we're going to talking about survival guide for 2019, how you can safely navigate the year of instability. I'm not surprised, because for the past 10 years, the stock market, the real estate have been a bull run for the last 10 years. This is a long stretch of the bull run. The bull run has been extended in terms of the stock market as well as the real estate. And every single year for the last 10 years, it has been going up and up and up and up. Most of the time, the cycle is every 7 to 8 years. Right now, it's overextended because probably with the easy money policy. So basically, it is clear that 2019 will be a different kind of year, and for the decade. Because of the financial crisis in 2008, we do enjoy a very stability and tranquility of the market, but this is suddenly evaporate at the end of 2018. Remember the S&P, the Dow Jones have a snow dive before Christmas. If you still remember, let's go back. So we have a slow dive, and then you go back up. Maybe it's time. Maybe it's a good opportunity for you to exit. But this is not a financial advice. Just FYI, I'm not a financial advisor. So use your due diligence. Let's go back. So basically, the world central bank are absolutely panicking because of after last year bursting of everything bubble. Their coordinated plans for quantitative tightening have been basically throwing out of the window. Remember, last year when the Fed chairman they keep on increasing the interest rate. Donald Trump, the president, come in saying, "Hey, if you keep on increasing the interest rate, the stock market is going to crash," and all that. So basically, the Fed chairman now, so suddenly this no chairman can prove himself too dovish. So basically, they want to stop the tightening. And this year, I doubt they will increase interest rate. Even though they increase, it will be very mild, and they will not increase so much rate hike last year. And so Jerome Powell, he is supposed to be a hardliner, right? And because of the stock market correction last year before Christmas, and all of a sudden everything the tightening, the quantitative tightening, basically throwing out of the window, and also the interest rate hike. They may not increase interest rate, it looks like, but I could be wrong. So Fed went from 4 rate hike to 0, and from the balance sheet reduction from autopilot to flexible. So basically, flexible is basically meaning that the tightening, depending on the economic indicator, depending on whether the stock market is doing well, the real estate doing, not the real estate, probably the stock market doing well, and all this indicator. And I think this guy from Northman Trader, basically the Fed is the market bitch. And the global tsunami of liquidity, basically thin air, money printing, released by the central banker cartel, has been defining the trend of the past decade. So for the last 10 years, you have tremendous increase in the stock market, all this easy money going to the stock market, going to the real estate, all this asset has been popping up. And because of the easy money policy, the interest rate is almost 0, right? Basically for the last 10 years. Until recently, they keep on increasing the interest rate, but it's a little bit too late. They should have increased the interest rate probably 3 to 4 years ago when Janet Yellen was the Fed chairman. Or even at the end of the term of Bernanke, they should have increased the interest rate. But though they are the academic people, and last time, before the 2008 financial collapse, Bernanke say, "Oh, the economy is still sound, blah blah blah." But what happened? It's a big collapse after he make that comment, right? And they are more academic, so I think whatever data they have is lagging behind. So, and one of the one of the most notorious legacy is the massive disparity of wealth and income resulting from the favoring the top 0.1%. And those are mega rich, and their asset has been skyrocketing. And the masses, the average Joe, basically mercilessly squeezed between the cost of living, and because of the increase, the cost of living has been increased, and also the wages has been stagnant, has not been, there's not much wages increase. You can see this graph, there's a wealth inequality. You can see a divergence in 1984. The top 1%, their wealth has been like skyrocketing. And the bottom 80%, they are going downhill. So this is there's a wealth inequality, the income disparity and all that. And of course, because of this, there's a yellow vest movement in France, right? And because of the tax break or for the establishment, and just like the Trump tax plan, all this tax cut is benefit the top 1%, the rich people, not the middle class or the bottom half of the people. And So the tax cut doesn't benefit the middle class at all. So the tax break is for the establishment, and the new taxes imposed on the public. For example, the France, they want to increase, I think, the gasoline price, the taxes for the gasoline, and that's what imposed on the average Joe basically. And so basically, right now they still have yellow vest movement in France, and in response, the French government, suppress all this yellow vest protests, and they use violence to suppress them. They beat them up and all that. I think it's unnecessary police force. But well, the people who is in power want to stay in power, right? But the mass majority of the people in France, or the working class, they want the president to be resigned, right? And also China also run into problem as well, because once again they are unstoppable economic growth engine. Now they are slowed down. For the past 3 or 4 years, their GDP probably roughly around 6%, but right now I think they are declining. It's no more growth. So not only the US or the European market, you know they are not, they don't have much growth. Now even China have been slowed down. So this will be very bad for the whole economy. So also they talk about the US shale oil miracle and the fracking and all that, for the abundance of the cheap domestic oil. And there's booming in some rural areas in the US. For example, in West Texas, in Nebraska, they have, some of the area, they do a lot of fracking. And once the oil well are done, those towns will become ghost town. But right now they're still fracking. But the problem is that fracking thing going to an end, because the big Wall Street player are now questioning the value of their existing investment in the shale oil. The industry basically have a hard time to raise money, and not a single bond sale has come up since November in the industry, because for them, this is a very capital intensive you know project, because fracking require a lot of water, require a lot of manpower, and to do that. And there's also drought in West Texas as well. And the majority of the US shale oil production is in the basin, Texas basin and all that, West Texas. And because they have drought in the area, that will also increase the cost of fracking as well. And another shocking thing is, like, in some part of the US, like Bakersfield, they also do, in Bakersfield, California, they also do fracking as well. And they basically recycle those fracking water for irrigation for the agriculture. That is a little bit shocking to me, because because fracking require a lot of water. They recycle those fracking water to basically for irrigating the agricultural product. I mean, this is I don't know how much you can recycle, because those could be very toxic, right? So another thing, if the fracking company, they cannot get enough capital, then there will be no more cheap oil, right? It could be. And those companies will go on bankruptcy, or they will shut down their operation and all that. That that may not be good to the economy as well. So they're talking about a poisonous cocktail. And because of the slowing global economy, and because of the addiction of the central bank stimulus, basically the majority of the big economy, they are basically on morphine for so many years. In the US, because of the quantitative easing policy, easy money policy, the interest rate almost go to zero, and the big bank has tons of all this easy money, and institution also have those type of easy money thing. And Japan has been printing money like crazy, and China as well, and Europe also printing money for the past few years, but I think they stopped probably for the last 1 or 2 years. All this basically all this big economic engine, they are all on morphine for the past decades. So and also the oil price, it may have a supply squeeze because of the fracking. they have a hard time to raise money. So they may have to shut down the operation. There will be no more cheap oil, right? Excuse me. So recession and refold. If anybody guess what happened from there, it seems certain that we now receive back to the tranquility of the past, but I don't think so, because this year will be a lot of volatility. I could be wrong too. And the economy can descend into a recession as well. There will be a widespread job losses and a deflationary correction, because the bubble has been keep on inflating and inflating. Eventually, you have to deflate the bubble, and all this elevated or inflated asset prices, stock market, real estate has to deflate it eventually. And also the central bank, basically, they want to do a QE4 fever. And because remember the Fed chairman, they talk about that, I think last year, at the end of December, they're saying that from the autopilot tightening, the quantitative tightening from autopilot to flexible. So that means they may not tighten. So that means, you still have another QE fever coming up. So this will be possibly we are going to have a stagflation, runaway stagflation, and possibly hyperinflation. Stagflation is even worse, because why? You have inflation, but the economy has no growth. So you have high prices but no growth is even worse. But if you have growth, you have inflation, that's fine. But if you have stagflation, that sucks, right? And of course, because of all this, either way, the pain and losses will be severe. And those who hurt the most will be the working poor, the elderly, the retirees. They basically live on the savings, and they don't put their money into the stock market. They put in a saving account for the past decades. Basically, the interest rate is almost to zero. So basically, they lose their purchasing power of the money. They sit on the bank and everything. So they lose out for the last 10 years. And the working poor, they don't have money to begin with. So basically, they lose their purchasing power because they cannot put their money into like real estate or stock market to grow their asset, right? And so this is a survival guide. That's why there's have some uprising against the political regime. And we'll see how it goes with the yellow vest movement in France. And this is a survival guide for 2019, because the bursting of everything bubble will be coming very soon, but we don't know. And maybe we will know. I'm not a financial advisor, but everything, if you go up and up all the way for 10 years for the stock market and real estate, isn't it just a market cycle? It may go back down. I mean, this is just common sense, right? So this is a survival guide for they have a survival guide in here. So prepare for the deflation as well as inflation. This is pretty interesting, because a lot of economists, they're saying that initially there may be deflationary because of the asset price need to be deflated, and then after the deflation it will go to inflationary stage. So we will see how it goes. Because of the past decade of the money printing, QE1, QE2, QE3 has blown up the prices well above the but well into the bubble territory. And because of the free money, easy money policy, all this money flow into the asset, right? And then pumping up all this asset like stock market or real estate. So with the bursting of the bubble, the central bank may resume, may somehow so the central bank may resume the committed tightening plan, but we don't know. But they said it's a flexible policy, so we don't know. And they recommend the investor to be more liquid, basically preserve your capital or your dry powder to ride out the correction and then re-enter the market when the asset at a discount price, when you buy back at a discount price, right? Right now, everything is overvalued. The price per earning ratio for all the stock in S&P, most of them are very overvalued. I mean, and they're saying they're holding cash in a short-term, holding cash or short-term U.S. Treasury bills, and also hedging for a major market correction. You can also hedge against the position doing reverse ETF called SH. By the way, I'm not a financial advisor. Once again, this is not a financial advice. Please use your due diligence. You should do your own study. This is not a financial advice. And also prepare for the inflation, because after the asset bubble deflated, and the central bank maybe they want to do another QE4 to save the economy, then there may be inflation coming up. So we don't know. So we'll see. Even the economists, nobody have a crystal ball, and a lot of economists saying deflation first and then inflation. So, and because if it's inflation, you probably want to own some precious metal like gold or silver. And so I'm not saying you put all your money to precious metal. You should have some, your portfolio should have some in gold or silver. This is just like an insurance policy. If you buy precious metal, it's like an insurance policy basically. And also an emergency. Prepare for likely emergency, blackout, stuff like that. This is interesting. It looks like we're going to doomsday. Also, unlikely emergency. For example, make sure you have your umbrella liability insurance, umbrella policy, if you just to protect against any liability. So more than 80% of the U.S. household either don't own any or underinsured, but it's up to you. And then you have to create your master plan and all that. Live resiliently. Well, I mean, it looks like we are going to have a tough time ahead. So make sure you have your contingency plan, just in case everything fell apart or the value of the US dollar or stuff like that. There's no everything go downhill. You should have your contingency plan, or you have a friends you can go. At least you have some water and canned food or whatever to survive for at least a month in case there's a riot, stuff like that. Or there's a place your friend already prepare for the doomsday. You can go to your friend's house or something like that. So I don't know. I mean, maybe this is too gloomy, but we never know. So prepare for the worst, hope for the best. That's all you can do. So I would say I would use my crypto rather than my Ether wallet. I haven't used my Ether wallet for a very long time. So also install the Brave browser. And if you're interested, you can click the link below. I use Brave browser a lot of times, especially reading the article, because they have a whole bunch of advertising popping up in my machine. I don't like it. So Brave browser block all this, and I like it. Very helpful. So if you find this video helpful, make sure you smash the like button, subscribe. Also comment below as well. That will help my ranking in YouTube. And also share with your friends. And I will continue to provide quality video for you guys as well. And also you can follow me on Twitter. And if you have already subscribed, make sure you hit the notification bell so you don't miss out the token swap or airdrop. Those can be very time sensitive. Remember, crypto deep divers, we the people take control of our money. Stay wise, stay safe, peace. I'm not a financial advisor. Investing in cryptocurrency or ICO has inherent risk. Please use your due diligence.